Welcome to GSTZen's webinar on GSTR-9C Annual Return Reconciliation Form. We will go over high-level details about GSTR-9C, how to collect data for 9C, and then we will fill the form in GSTZen software and we'll upload it to the government portal. I have with me CA Venugopal Gela. He will start first. He will provide us with an overview of GSTR-9C as always. Thank you, Venu, for your support.
Yeah.
I think you are live on screen. You can get started.
Hello, viewers. Very good afternoon. Welcome to the GSTR-9C by GSTZen. And the today's session, the focus of today's session is more to do with how to fill the data in GSTR-9C and also what is the use of technology in filling various tables in GSTR-9C. What we will do is we will spend some time in understanding various tables in GSTR-9C. Then we will get on to the portal in understanding how to fill in the details of each of the table. All right. So moving on, let me share my screen in explaining GSTR-9C. All right. So let's get into the GSTR-9C, the annual returns and the audit. By now, I'm sure most of you have done annual return filing, and some of you would have finalized your 9C and waiting for some confirmations. Maybe some portal related issue or some clarifications in finalizing anything. Yeah. So in this session, we will understand various provisions of the law, clause by clause understanding of GSTR-9C, and critical part of this today's discussion is how to use GSTZen in filling of data in various tables in 9C. If I have to come on the basics of annual returns and audit, by now we all know that the due date of filing of annual returns is 30th June, and generally that provisions are 31st December of the subsequent years. But today's session is more on 9C. Along with the annual return, every user whose turnover is more than 2 crores, they would have to file GSTR-9C along with GSTR-9. So the requirement is the annual return more than 2 crores. If the annual return is more than 2 crores and the turnover, the annual return to be filed by the SSC first, which is GSTR-9. And if it is a case of an audit, he will submit an GSTR-9C subsequently. The question first comes is, what is this turnover which needs to be checked? So the turnover which needs to be checked for GSTR-9C is an aggregate turnover which is more than 2 crores. And if it is more than 2 crores, one has to file GSTR-9C. A common question that generally users ask is, I am present in 2 states. Turnover in state 1 is 1 crore 50 lakhs and turnover in state 2 is 1 crore. Both the turnovers are less than 2 crores. Should the audit be required? Some of the questions that would come is, turnover in state 1 is 2 crore 10 lakhs and turnover in state 2 is 5 lakhs. Even for the turnover in the state 2, should GSTR-9C be filed? These are the questions that generally come up. The answer to it is, if GSTR-9C is applicable, then GSTR-9C has to be filed for all the states. I think this is one common thing users have to keep in mind before finalizing GSTR-9C. question that comes is, what is my annual turnover? Is it 9 months or 12 months? Yeah, this is an answer which is not addressed by the department. And as on a conservative basis, let us take that it is a 1 year turnover. And the 2 subsection 6 of the Act talks about aggregate turnover, which is PAN based turnover. I think if this is clarified that GSTR-9C is applicable, then check that 9C to be filed for everyone. If 9C is applicable to everyone, then we have to file 9C. So what is an audit? The audit is examination of records, returns, and other documents maintained by the person, whether under this act or any other act. But broadly, in order to understand the correctness of the turnover, correctness of the taxes paid, and the refunds to be claimed, the input tax credit availed. If we look at the form GSTR-9C, the form is also designed in understanding the user's compliance of the act with all these activities. So if we have to understand GSTR-9C, this is more like a tax audit report under income tax. So even under income tax, we have a tax audit report, a 3CD and 3CA or 3CB. So form GSTR-9C is divided into 2 parts. Part A is a reconciliation statement. Part B is a certification which we will be giving. So you can consider part A is like a 3CD report. Part B is like 3CA or a 3CB. And part A is a reconciliation of all the aspects which I have mentioned in the earlier slide about audit. Finally, auditor would give a recommendation of the additional liability basis his observations. In part B, the auditor would choose if the GST auditor and the financial auditor is same. So like a 3CA, they would be using certificate format in B1. If the auditor is different, like a 3CB report, then there is a different certificate one would be issuing. Very important thing one has to note is, while preparing GSTR-9C, the source of the data is GSTR-9 and audited financial statements. GSTR-9 is prepared by the SSE, and GSTR-9C is now attempting to compare the compliance which the SSE has done in GSTR-9 and the audited financials. Are they matching and is it correct? So main thing about GST audit is, when the client has prepared GSTR-9, is it same as what is there in audited financial statements or derived from the audited financial statements? Cases where the GST audit is not applicable, even the assessing officer would attempt to do a reconciliation line like 9C for completion of the audit. So while doing the GST audit, the GST auditor will not be looking at GSTR-3B, GSTR-1, GSTR-2A or any other adjustments which the SSE has done. What auditor would be considering is only GSTR-9 and audited financial statements. So how is the form divided? A very beautifully prepared form. If one has to understand what is the tax liability of an SSE, the tax liability is always my taxable turnover multiplied by rate of tax less input tax credit. Now taxable turnover, we can say aggregate turnover less exemptions. So the duty of the GST auditor is to check the correctness of the turnover, the correctness of the exemptions claimed. Maybe the turnover and exemptions claimed are correct. The taxable turnover, what the SSE is disclosing and what is there in GSTR-9 is matching. Maybe the rate of tax might not be the same. Even if the rate of tax is same, the input tax credit claim might not be the same. So the GSTR-9C is divided into 5 parts, attempting to understand whether these parameters which will lead to the net tax liability, is it correct or not? Part 1 talks about basic details of the SSE, table 1 to table 4. Part 2 is a reconciliation of the turnover, gross turnover, exemptions, taxable turnover. Part 3 is reconciliation of the tax payable and taxes paid. Part 4 is input tax credit reconciliation. Part 5 is the auditor's recommendation on the additional liability. So for each of the table, there is a reconciliation. If the reconciliation is not matching, there is a reason for differences. Like table 5, gross turnover reconciliation, table 6, if there is not matching, the reason for it. So we will get into each table by table analysis. Part 1, basic information. So this data is basic information which users would be filling, and this is very basic. I will move on to part 2, which is important information, which is reconciliation of the turnover declared in the audited financials along with the turnover declared in the annual returns. So it is a reconciliation of the turnover declared in the audited financials with the turnover declared in the annual returns. So here the SSE has a ownership to identify whatever is the turnover as per PAN to segregate into GSTN-wise. This GSTN-wise segregated PAN would be audited by the GST auditor. So the turnover is divided into 4 tables. Table 5 about a gross turnover. Table 6 is the reconciliation with the gross turnover. Table 7 is the reduction of exemptions from gross turnover. And table 8 is difference, if any, in the taxable turnover. Let's understand table 5. So table 5, if I have to put it in a simple way, I have some turnover in my financial statements, and the turnover which is there in the financial statements might not be always the turnover for the purpose of GST. For example, I have a no supply, I wouldn't have disclosed in my GST. Or I have my April to June, which is not there in my GST turnover. I have my interbranch transactions, which is there in GST, but not there in books of accounts. Or I would have sold a capital asset. I only have profit on sale of assets in my P&L account, but for the purpose of GST, I have to recognize full taxable value of the sale of this capital goods. So there are various adjustments that needs to be done from the P&L account to derive at what is the value which needs to be there in GSTR1. Table 5 is also designed in the same way, saying that what is the turnover as per audited financial accounts carved out to GST NID, and we are going to do various adjustments. The various adjustments beginning with unbilled revenue, which is beginning at the financial year, so wouldn't have been recognized as a revenue in the previous financial year, but for the purpose of GST, it is a revenue. Similarly, unadjusted advances, the taxes are payable on the advances. However, it wouldn't be forming part of revenue in the financials. So you would do all the similar kind of adjustments from 5A to 5O, and you would derive a turnover what is expected to be for the purpose of GST, that is 5P, which is an auto calculated. Now this 5P is verified with 5Q, which is the turnover declared by the SSE in the annual returns. In the annual returns, the gross turnover is disclosed in table number 5N plus 10 and 11, so subject to the subsequent year adjustment. So this table 5 is attempting to reconcile books with the audited financials. If there is any unreconciled turnover, which is 5R, is explained in table 6. And there are adjustments which are beyond what is listed in table 5. Auditor can use table 5O, adjustments in turnover due to any other reasons, which can be plus or minus, and you can list out any other adjustments which needs to be done. And 5Q is the derived turnover for the purpose of the audit, and the reasons, if it is not matching, it is explained in table number 6. Reasons could be the SSE has not disclosed any turnover, or some turnover is erroneously disclosed in GSTR9, missed out disclosing a taxable turnover for the purpose of GST. It could be any of their error, a typographical error too. So auditor has to analyze why there is a reason, why there is a difference between derived GST turnover as per auditor versus what the SSC has declared in GSTR 9. These reasons are given in table number 6. Table number 7 is, now I have the derived gross turnover. This derived gross turnover, I will be reducing the exemptions. In my view as an auditor, I would look at what are the exemptions. So I would only be giving those exemptions which are eligible for. Now, if a client SSC has claimed an exemption of say 1 crore, and as an auditor, the auditor doesn't feel that those exemptions are right, so the value that would be reported in 7B would be 0. Similarly, exports without payment of tax, zero rated supplies, all those things where there is no tax impact, all these items would be reduced from my gross turnover to derive at what is my taxable turnover. So the taxable turnover is derived in 7F and this 7E, and it is reconciled with the taxable turnover disclosed by the SSC in GSTR 9. So the taxable turnover disclosed by the SSC is in table 4N of GSTR 9, which includes the reverse charge 4G, so 4N minus 4G. However, if there are subsequent transactions, you would add table 10 and minus 11. That is compared and reconciled, and any deviation, that deviation is explained in table number 8. So auditor is giving a reconciliation of why there is a difference, and the 82 is the taxable turnover. This taxable turnover, which is derived, is segregated into rate wise. So the GST auditor would segregate this turnover so derived into various rates. 5% regular rate, 5% reverse charge rate. So the entire transactions are divided into rate wise, and this table would also include the liability of the SSC with reverse charge transactions also. So the registered taxpayer would have discharged the taxes, and such tax payable of his he has disclosed in GSTR 9. In GSTR 9, table number 9, there is a tax payable the SSC is disclosing. Along with the tax payable is also disclosed in table 10 upward and table 11 downward. So the GST auditor is now going to derive what is the tax liability as per the GST auditor compared with table 9Q, which is listed in GSTR 9. This unreconciled taxes would be explained by way of the reasons for it in table number 10. In table 10, the reasons why the taxes as per the auditor and taxes as per the SSC is not matching is explained. These reasons we have seen in table number 6, table number 8, and table number 10. Duty on account of turnover, duty on account of rate of tax. Whenever it is not matching, the reasons are listed, and table number 11, the auditor is going to recommend a liability owing to turnover and the taxes. Table 6, 8, and 10 will be considered, and auditor would say, on account of turnover or rate of taxes not matching, this is going to be an additional liability, addition amount payable which is not paid for various any other reasons. Now, this amount which is not paid can be disclosed here, and that SSC can be paying it through DRC 03. We have completed first part of GSTR 9C. Let us understand the input tax credit, which is the other part of GSTR 9C where the liability may arise. The other part of GSTR 9C where the liability is arising will be on account of input tax credit, which is in two-way reconciliation government is looking at. One is the input tax credit which someone is claiming, is it same as per books of accounts or not? If it is as per books of accounts, well and good. So table 12 is similar to your bank reconciliation statement, where we take balance as per bank book, we add the checks issued not cleared, or we'll subtract the checks deposited, and we'll try to derive at the bank balance. So here I take the GST input tax credit as per books of accounts, but I might have not claimed the same credit in the same financial year in the GST. So I will try to reduce whatever the input tax credit which is claimed subsequently. and earlier year input tax credit which is claimed in the current period I would be adding, and we would derive at what is the expected input tax credit to be claimed. This is reconciled with in 12E what is the input tax credit which the registered taxpayer is disclosing in GSTR-9. The reference of GSTR-9 is table 7J. If this is not matching, we will give an explanation. So my ITC as per book which is filed in 1718, filed in 1819, I segregate and compare with GSTR-9 which is table 7J. Any difference which is not matching is explained in table number 13, why the difference it is and why is it not matching. It could be various things. The credit availed as per books is not matching, maybe typographical errors, or it was have been capitalized in the books or written off in the books but taken in GSTR-9. So various things could have happened and the reasons would be given. A very important table where again the ownership is casted on the GST auditor to segregate the expenditure into each input tax credit into expenditure wise. And this is going to be little challenging, like table 9 where the turnover has to be segregated into rate wise. Similarly, input tax credit has to be segregated into expenditure wise. However, we can use some tools to automate, and I will show you a demo of how that needs to be done. But what is to be filled here is for the first year, what is the value of expenditure as per audited financial statements or books of accounts. So the 9 months purchases, everything. How much is the input tax credit on the column value 2? So purchases is 1 crore, the input tax credit is 18 lakhs. Of the input tax credit which is 18 lakhs, how much of this 18 lakhs it is eligible and availed by the SSE will come in column 4 of table number 14. So SSE would be submitting all the books of accounts, auditor would be verifying it. He will now report the input tax credit by expenditure and by eligibility. Trust me, this is going to be a more challenging and onerous task. They have also provided any other expenditure under column 14PQ where the GST auditor can list out any other expenditures. Similarly, some of the input tax credit which is claimed can be part of the capital assets. So 14O, the capital goods are there. 14R is the total amount of input tax credit claimed and compared with 14S which is claimed by the SSE in GSTR-9 which is 7J. And this unreconciled ITC is in 14T, which the auditor has to give why it is not matching, and the explanation to be given in table number 15. The reasons why the input tax credit as per the auditor and as per the SSE is not matching. Now, owing to the reasons given in table number 13 and table number 15, the auditor will give an additional recommendation on the liability which is arising because of the input tax credit. So how much of the liability to be paid because an excess input tax credit or an ineligible input tax credit one has availed. So how much of CGST, SGST, IGST needs to be paid would be given in table number 16. Now, once the 16 liability is given, so there are right now there are 2 liability tables which we have seen. One is table number 11, another table number 16. Considering both, the auditor will give in part 5, the last table, the final recommendation of the auditor on account of additional liability. Either the rate of taxes are not matching or the input tax credit is not matching. This liability which has to be given, both the taxable value and CGST, SGST, IGST, all the amounts have to be given. So the auditor would be giving an additional liability for the SSE and saying that this is the final liability. So the government has released an Excel utility. This can be downloaded on the GST and CBIC gst.gov.in. The 9C can be filled with this additional liability, and auditor will fill the verification statement, affix his digital signature, generate the JSON, and pass it on to the user for filing. When you use the GSTZen, you can do this on the portal itself, which we will see how this can be done using GSTZen. So let me move on to the portal in understanding how to do this on the portal. All right, so let me log into the GSTZen account and see how do we do this. All right, so let me log into the account. So once you log into the account, you will see the portal, and when you go down, you will find GSTR-1, 3B, 9. You can select GSTR-9. I've just created a test account for you to understand. Here, there are various steps which have been given for preparing 9. In the earlier video, we have seen how GSTR-9 to be prepared. Let's click on the GSTR-9C, the annual returns and annual reconciliation statement, and let's see how this needs to be done. Here you can click on login to GST government portal with the OTP to download the auto-filled GSTR-9. So the portal, the GSTZen tool will automatically download all the filled data. And once the filled data has been downloaded, you can see both in the PDF and also on the portal. A very important which I would want to explain is filling of various tables, which is GSTR-9C. So you can see all the table by table data here. You can click on data filled as per GSTR-9. You will see the 9 tables or the values entered by you. User can enter the values. So you can navigate to any of the tables directly and you can do the data entry, or you can chronologically come in. So if your data which is ready to be filed is available, say if your turnover, for the case of understanding this, say 2,53,25,000 and some number, and you can start entering all the values. This would be compared with whatever is there in GSTR-9, and if there is something not matching, you can give the turnover short disclosed, or whatever the reason, I can give some, whatever the explanation as an auditor which is there. So you give the explanation and submit it. You can have the each table by table the data which can be entered, and you can come to the end. Any reasons which is there, you can also give an explanation. So here is the 2 important tables which I would want to explain before I pass on the baton to Surya. One is the table number 9, reconciliation of rate-wise liability, and the second one is the table number 14, how one can extract all the expenditure by taxable value and the amount of the tax. So if you can, you have an option in the GSTZen to download a consolidated data. You can log into the account and you can download, say, a consolidated data for 2017-18. When you click on 2017-18, you can, let me just set the values. Yeah. You can click here to download 2017-18 consolidated report. So when you click, all the data, whatever which is filed for 2017-18, GSTR-1, GSTR-2A, GSTR-3B, it gets downloaded, and it will also get downloaded. So, and it takes maybe less than a minute. It downloads all the 2A data, return wise data, everything, and you can use it for filing GSTR-9. So I will go to the download the data which has been downloaded. So once you can, yeah. So what it gets downloaded, it, you can see you have the data of GSTR-9 auto-filled, the reconciliation statements, and a summary versus 3B versus 1. If there is a gap in any of the values, even that gets reported. You can have the GSTR-1, a quick review of what has been filed. All this data is available for verification. So very important, I would like to explain how do we generate table number 9 rate-wise report. You have one more sheet here in GSTR-1, which is GSTR-1 by customer. Whatever the data which you have filed, including B2C, regular, everything, the data is available invoice-wise, rate-wise, month-wise. This data can be used maybe if the GSTR1 is correct, and if there is something wrong, what is the incremental data which needs to be applied, and user can actually fill in what is the value of the turnover, and we can just use all right. So here we go. So now for filling the data in table number 9, you need the total turnover rate wise, month wise. So now how much of the turnover. So in this case 47 crores 52 lakhs is the turnover. This turnover is segregated into 0% turnover 6 crores 45 lakhs, 5% turnover 40 lakhs, 1 lakh 67 in 12%, 18% turnover into 86 lakhs 91,000. You can come back to the portal, and when you are filling GSTR-9C table number, let me navigate to the 9C table number 9. So moving on to table number 9, now you have ownership is casted on the SSC that they file the turnover rate wise. Each rate wise the turnover needs to be filed. So you would check whether this turnover, how do we fill the taxable value, CGST, SGST, IGST. This can easily be now extracted from what we have done here. This is not just the turnover, you can fetch the IGST amount, the rate wise, CGST, SGST, and the cess can be obtained rate wise. So now under 5%, we know what is the taxable value, what is the IGST amount, what is the CGST, SGST amount that needs to be filled is easily obtained, and this can be used in filling up into the form here. So I hope this would address one bigger challenge: how would one fill the data of the rate wise the turnover. The second challenge which again users have is, how do I fill expenditure wise, rate wise? Now for this I have also I would explain one small tool which is available here. In the, again, once you log into the account, in your account you will find a tally connector. If the, okay, this is right now the tally connector is there. If the users are SAP and others, you have to get a tally other connectors. So I'm using tally here. I'm taking a tally connector. So one can upload a purchase register. Either it can be uploaded or it can be automatically synced. Here is a tally which I have opened now. All right, so let me show it from the beginning. So right now there are no companies opened. Let me open a demo company. All right, so automatically you can now see, okay, a company is used. So you can click on use this company, and once you have processed, you can, if you are making some entries changed in the tally, you can process the ledgers again. If the ledgers are processed, you can say the existing ledgers to be used. You can give whatever the period for which you want to use the data from. So in this case, I want to use the data from directly from 1st July 2017 to 31st March 2018. Now it is quite a huge data. So I want to still show that, okay, this entire data which needs to be used. Now roughly there are some 4,000-5,000 vouchers which are there. So all these vouchers will now be automatically imported onto the GSTZen tool. The good part of it, this data is imported, and it will also try to segregate what is the value of expenditure, how much is the input tax credit which is availed bifurcated into CGST, SGST, IGST, and it will also present that how much of it is capital goods credit, input services. Because it is segregated by vendor, users can be easily able to segregate and download. Now this onerous job, if one has to do it manually, I think it is going to take a huge task, because preparing even some 100 vouchers will be a challenging job. So now all the tally data has been uploaded to the portal. Now it is also saying that some GSTNs are showing up wrong, and it will give you an error report. You can now download what are the errors which are there, and the entire GSTZen download report, right? So I can download my purchase register, and this purchase register is giving me all the vouchers which has been considered. So what are the vouchers which are there for my purchase? What are the vouchers which is not considered? And these vouchers, when you have downloaded, these vouchers can be used for preparing your GSTR-9C table number 14. Like in this case, these are all my vouchers which have been imported and purchased. Now I know all the expenditure which is rate wise, category wise, all the expenditure is available. It will also show how much of the vouchers which have not been processed. What vouchers which have not been processed? Maybe because these are the sales voucher, that is why it is not processed. You can do a simple pivot, and you can say by expenditure, what is the value, how much of the expenditure is by value, and the how much is the ITC which is available, and how much of it is by expenditure. You can see how much is the expenditure, each expenditure head wise, what is the expenditure value and what is the ITC. Now you may also have a requirement to know that you want to see how much is IGST, CGST and SGST. So you can also segregate, since this is just one Excel report, you can also segregate the total ITC into various categories. So this tool will help me now fill GSTR-9C. Going back to my GSTR-9C on the portal, when I'm in GSTR-9C of Zen, I come back here and go to table number 14, where I have to now enter the values, how much of my purchases, what is the ITC, how much is availed. So now I can, in one go, I can know how much of my purchases. I can just do a copy of this and paste it here. This is the purchases, and the total ITC is so much, and you can do a copy paste of all the data. So in one go, you know what is the value to be entered, can also be extracted from the books of accounts. So usage of a technology will definitely help you to simplify how to fill various informations. Only point, please note, whenever you are entering a value, you please keep saving the form. So the form is saved, so that when you go back, you don't miss out on any data. Broadly, if I have to explain the steps in filing, you download the data from the government portal, you fill it online on the 9C. You can do a preliminary validation where you can submit the 9C to the portal and see whether the digital signature is correct, the GSTR9s are correct, hash is correct, everything. And then you can upload onto the government portal. So these are the various steps that involved.